I don't know if you're familiar with IKEA and when you're buying furniture where you have to build it. If you try and rush the building of that, the end product is going to be awful. You have to take a really careful, measured approach to the way you're going to build your piece of furniture. And that then gives you much more of a chance of creating a product that is of high quality with good results. That is no different to the way you treat personal finance and trading.
As 2023 draws to an end with the highest interest rate seen in 22 years, the inevitable result is increased borrowing costs. Looking ahead to the new year, what can we anticipate? Joining us for today's episode is Phil Waters, the CEO of APAC and Emerging Markets for Oanda. Hi Phil, thanks for joining us.
Thank you very much for having me. Pleasure to be here.
Absolutely. It's almost the end of the year. So I think our audience is really interested in how they can build a brighter financial future in 2024. Now, in order to do that, we need to look back. So what were the standout financial moments or trends in 2023 that impacted individuals, and how do they set the stage for 2024?
If I'm an individual thinking about how do I learn and look back on 2023 before I then go into 2024, is the US. Because going into 2023, there was very much an expectation that we might see a recession. And the reality is we haven't. And in many ways, we've seen the opposite result in the US. First of all, the year didn't start well for the US because we had in Q1 and parts of Q2 the 2023 banking crisis. So we had a couple of the mid-tier banks in the US go under. That really stemmed from poor risk management, bad supervision and governance from those banks, and it sort of didn't set the US up for the year ahead. However, we've actually seen what has essentially been strong employment levels, strong consumer spending, and this is in spite of the Fed keeping the interest rates at a high level, and actually the stock market has outperformed the rest of the world. So if you look at the S&P, it's over 20% ahead against the world stock index. So that's a really interesting fact. It's actually then even more interesting when you look at particularly the NASDAQ, and the NASDAQ represents tech stocks in particular. Within that, you've got what's called the Magnificent Seven. So that is some of the big market cap stocks that exist, the likes of Apple, Microsoft, Tesla. Now, the NASDAQ has outperformed the S&P by 2 times. So it's a really interesting year from that perspective because these expectations, I think, were justified going into 2023. If you looked at all of the economic data that came out of 2022, you would have very much expected that the US might have had a really difficult year, and it just hasn't. You just have to be super careful with how you're looking at data retrospectively when you're then thinking about going forward, because it might not necessarily play out how it looks like it will. So that's, I think, the US story. In Japan, it's been interesting because you've had the Japanese yen hit what has been a 33-year low against the US dollar. That's been really difficult locally. Just from my own experience, I actually visited Japan earlier this year, and from a tourist perspective, it's actually great because you're going in and the cost of things is lower. But businesses have struggled, people have struggled, and that's been really difficult on the economy there. So that's been an interesting dynamic and has massively impacted the Forex market for yen against other pairs. And then you've got, I think, the China story, which has also been quite interesting. So we had a delayed exit for China in terms of its dealing with COVID, so the opening up post-COVID. And the expectation for China was sort of dissimilar to the US in that there was a thought process that we might see a bounce back. That did materialize in Q1, but then there's been deflationary pressure in China, which has been mostly fueled by the property market, which has been weak this year. And so again, comparing that, the stock markets for China and also Hong Kong, that's actually taken a loss this year. Year to date is down over 10% in both cases. I think the point with all of that is that there are sort of these mixed dynamics at play, and the story is very different by region. Past data is not necessarily always indicative of trends. And so you've got to be really careful with how you treat that when you're planning ahead.
Can you share a personal financial highlight or a challenge that you faced in 2023 and how it has influenced your outlook for 2024?
It's actually probably more leaning towards the challenges. On the personal side, you know, I live in Singapore, but I am a UK citizen, so I rent here. I'm a visa holder. The rental market has been super hot, right? I mean, it actually probably peaked at the end of 2022, but it's just not come back down in 2023. So I felt that massively. And the average for the whole of Singapore at the end of 2022 was about a 35% increase on rental increase. And that's on private residential properties. You know, there are pockets of Singapore that were disproportionately higher. Some people who have had to leave Singapore as a result, they can't absorb the increase in cost of living. So that's been challenging. We've lost some good talent. I've lost some good friends. Fortunately, that is cooling off a bit, I guess, now more towards the end of this year going into next. But it's definitely been a more personal challenge. Now, on the business side, what we've seen happen in Singapore in the CFD industry, the market's actually contracted. And this is less of a product of what's going on in 2023 and more of a hangover effect from COVID, actually. So COVID, that era, what it did is create lots of sustained market volatility. And we have a direct correlation, our industry and market size, with market volatility, in that if there's market volatility, it creates trading opportunities. People want to get into the market, they might have a view, they want to speculate on that, or maybe even hedge risk. There's lots of different motivations for trading. So we saw a big boom in trading interest around that period. And ever since then, so really 2022 and then continuing into 2023, that's just continued to decline, which has been an interesting challenge and a good learning curve for our business. We've just had to really find great ways to showcase our value proposition, stimulate demand, and prove that Oanda is the place to trade if you're an active trader, even in these market conditions.
You mentioned, you know, your friends leaving, the market volatility. I don't want our audience to kind of lose faith or lose hope or be demotivated, right? How do you recommend our audience assess their own financial performance in 2023 looking back, and what factors should they consider so that they keep moving forward?
My view on this is you have to stay disciplined. And actually everything you do has to center around discipline. If I think of my business, really what makes someone a smarter trader, I don't know if you're familiar with IKEA and when you're buying furniture where you have to build it. If you try and rush the building of that, the end product is going to be awful. And actually it's really hard to undo, the damage is done. You have to take a really careful, measured approach to the way you're going to build your piece of furniture. And that then gives you much more of a chance of creating a product that is of high quality with good results. That is no different to the way you treat personal finance and trading. You have to be really meticulous. You have to be clear on your strategy. Don't rush it, right? Take your time and be patient. Also, make sure you're choosing a provider that is trusted, well-regulated, established, and has a proven track record in the same way you choose products that have good quality so that they last.
2024 is going to come around. We always want to think of ways that we can be new, so to speak, right? New body, new suit, new shoes, new outlook on life. So leading into my next question, what advice then do you have for setting realistic financial resolutions for the new year, and any tips on achieving them?
Setting a New Year's resolution is quite easy. It's the sticking to it that typically is quite hard. You know, when it comes to financial objectives, though, you definitely have to start by reflecting. That'll allow you to learn where you maybe have made mistakes in the past. If you do take that time and look back at data, which is available to you, you can make that assessment and appraisal quite quickly. And it informs how you then might set your objectives, because you can then base them on where you're making mistakes rather than the end goal. It just sort of helps you understand how you're going to get there. The chances of you achieving your financial objectives, I think, is just about making as fewer mistakes as possible along the way. And as I said before, it's about staying disciplined.
Fantastic. All right, Phil, do you have any final thoughts?
You know, 2024 should be interesting. I think we've got what might be quite a volatile year ahead. You know, you've got the interest rate environment, which remains pretty volatile. We might see that change direction as early as March, but maybe not, time will tell. Economic indicators, they're indicative. so I've got to be careful about how you treat those data points. The other thing that's going to be quite interesting is the US elections, because that will have a global effect on just the sort of macroeconomic environment and financial landscape. So I would say just be super careful, as always, in terms of how you're setting your objectives, how you go about your planning from a personal finance perspective, as well as a business finance perspective, based on your own personal circumstances, because everybody has different circumstances that they have to navigate as well. So they would be my tips for the year ahead and final thoughts.
All right, thank you so much for your insight. Let's do this again.
Yeah, would love to.
Great.
Thanks very much.
As we move ahead, staying attentive to market trends and consistently reviewing your portfolio and your financial goals is crucial for maintaining a healthy and adaptable financial strategy. You've been watching Teatime Tuesday. Until next time, keep seeking knowledge and financial empowerment.